They just gave you permission to do retirement planning with them. You didn't even ask them. They asked you. It's like killer fun. And then all you have to do is a little bit of math, and you can show them how they can take from their IRAs and their 401ks and their taxable money, pay little or no income tax to get from 65 to 70. And then they can max out this really important benefit for the rest of their life. And now you have a mistaken thing going on in our country right now where a lot of people think, oh, we're not going to get our Social Security.
Mhm.
There are 72 million baby boomers born between 1946 and 1964. And we have 3 more years of 11,000 baby boomers a day turning 65. Okay. There are 66 million Generation Xers born between 1965 and 1980. That means every single one of those is over the age of 46 years old right now. Let me ask you something. Any of those guys going to be happy if we don't
No.
make Social Security okay? Don't you think they would vote that person out of office so fast it'll make your head spin? So please don't misunderstand. They'll fix Social Security. Will there be a cost? Of course. And who's going to pay it? Won't it be our children and our grandchildren? Of course it will.
Yeah.
And so then you say to grandma and grandpa, you say, but what if there was a way that you could maximize your benefits and make sure that it stayed in the family instead of going to the government, and you could make sure that your children and your grandchildren are okay? Man, wouldn't that be the best outcome of all? And gosh, if you knew you could do that right now, when would you want to get started?
Today.
That's what they say. I'm not kidding. And it just takes that long. And that's just one. Please, I have 1,000 questions like that.
That's one path.
That's one question. Another really hot one, and this is one of the ones I'm going to share tomorrow. What would it be like if you could be the beneficiary of your own life insurance policy while you're still alive? And wait. Before you answer, do you know why I'm asking you? What do most people think you have to do in order to collect on life insurance?
Die.
Would it be a revelation to you if I explained to you and showed you and shared with you that there is not an insurance company that has ever existed that has ever paid any money to a dead person? It's life insurance. It's there to take care of the people we love, the businesses we've created, and the charities that we have consideration for. Then I lean in and I go, but I don't want you to die. What if I could show you how to take advantage of all the living benefits of a cash value life insurance policy so that, first of all, you'd never lose any money ever again? And second of all, the money would be so liquid, so accessible that every time something bad happened, when it was done happening, you'd have access to money without having to ask anybody for permission. It's your money. You'd be able to go and get that money and take advantage of opportunities. And I saved the best part for last. I hope you're ready. What if you could do all of that with reduced or total elimination of your income tax liability? And I'm just getting started. You know, if you really understand, lots of people try to compare life insurance to investments. Please really hear me. Life insurance is not a good investment.
Thank you for saying that.
That's demeaning to life insurance. It is the most flexible financial vehicle ever conceived of in the mind of a human being. And its flexibility is what makes it so special. Here's what I mean. In today's world, where are you going to get money to offset inflation? Where are you going to get money to take care of long-term care? Where are you going to get money if you have a critical illness like a heart attack, stroke, or cancer, and you got to take money out of pocket to get those bills off your plate? And if you take it out of your investments, isn't that going to lower your investments? And isn't that going to lower your inheritance? Well, what if with the cash value life insurance? Let's compare it. Let's say you had $300,000 in an IRA in the last 2 years of your life. You go into the nursing home and then you die. How much money would your family get? They'd get the $100,000 that's left. But if you had $300,000 in cash value in the cash value life insurance policy and the face amount was $500,000, let's say you're not even that healthy, $500,000, and they used $200,000 the last 2 years of your life. Do we subtract the $200,000 from the $300,000 you gave me, or do we subtract it from the $500,000 face amount? The answer is easy, isn't it? So stop and think. You used 2/3 of your money while you were alive, and the day you died, you replenished your legacy for your family income tax free. I have a question for you. Do you know any other money in the world that can do that? And do you really understand, really think about this? It's really important that you think about this. Isn't it the only money on planet Earth that you're allowed to use the same exact money twice?